Hello and welcome to the European Open briefing for May 24. So, risk aversion dominated financial markets on Thursday after some disappointing PMI data in the US and Europe combined with trade tensions amplified concerns about the global growth outlook. The result was a classic risk-off reaction, with stock markets suffering losses of around 1 to 2%, while safe haven currencies like the yen and the Swiss franc outperformed. Now, most of these moves are retracing a little bit on Friday. Futures point to a higher open on Wall Street, for example, following some remarks from Trump overnight that there is still a good possibility for a trade deal and that Huawei could be part of that deal. That being said though, this looks more like a temporary reprieve before the next storm and not the beginning of a stable recovery in risk sentiment, as there are literally no signs that trade tensions will ease anytime soon. Turning to the dollar, it traded much lower overall yesterday as the signals from the PMIs that growth is slowing down raised even further the odds for the Fed to cut rates soon. Is this a game changer for the US currency though? Maybe not. A lot of Fed easing is already priced in, and for the dollar to really weaken from here, it may require either a prolonged string of discouraging US news or positive developments abroad, neither of which is there yet. Finally, the British pound stabilized somewhat today following more than 2 weeks of losses. Theresa May is expected to announce her departure date soon, maybe even today, and her most likely replacement is Boris Johnson, who advocates less close relations with Europe. This means a greater risk of a no-deal Brexit, and while some of that pessimism is probably priced in already, the outlook for the pound still seems negative. So that's it from me. Thank you very much for watching and have a great day.